What's up everybody, Crypto Noah back with another video. In this video, we're going to be covering a project that fits between what I think will be the largest narrative to create wealth in this upcoming bull market in real world assets. I made a video covering the other three narratives. Watch that if you want to find out the other three. And then they also fit within a derivative under the RWA narrative, which is private credit. The reason why this is an issue is because within crypto, for crypto companies, it's hard for them to get access to credit because a lot of people still see crypto as a scam or illegitimate. So they either can't get it or they have to get it with extremely high rates. And the fact that interest rates are really high right now and probably will be for a minute doesn't help. And within crypto, you can only get access to over collateralized lending. The problem is, in crypto, you can only borrow like you would at a pawn shop. When you go to a pawn shop, let's say I want to pawn this remote to change the color of my lights. I give it to them. They give me some money. I can go get some more money. I give them money and I get it back. It's the same thing within crypto. You deposit collateral and you can borrow against the collateral. But the whole reason that you want to borrow money is because you want to get access to money that you didn't have before. Imagine how impractical it would be if you were trying to get a mortgage and your mortgage was $300,000, and in order to borrow money, you have to put up $350,000 to $400,000 in collateral. That's the whole point of borrowing, so you can get access to the money. It's impractical. It's not how people borrow in the real world, and it's for damn sure not how institutions borrow money in the real world as well. So the project we're covering in this video is called Clearpool, and they're aiming to help solve this issue. And so far, as you'll see in this video, they're doing a pretty damn good job. So before we get started, I do have to say this video should not be taken as financial advice. Please consult with your financial advisor before making any investment decisions. This video right here is for your education purposes only. So in this video, we're going to be covering what Clearpool is. And when I say what they are, we're going to go through their documentation and I'm going to read the important parts, and the parts that aren't self-explanatory, I'm gonna break it down and make it simple to understand. We're gonna go through the tokenomics, we're gonna go through the team, we're gonna see how they stack up against their competitors, we're gonna see how they've been performing in their businesses so far. Like, I'm gonna give you guys everything, except for two things. And if you wanna know when those two things are coming out, stick around to the end and I'm gonna give you guys a little surprise / heads up. All right, so without further ado, let's hop right into the Clearpool docs. So what is Clearpool? Clearpool is a decentralized finance ecosystem incorporating the first ever, I don't know about that, permissionless marketplace for unsecured institutional liquidity. And as you can see here, an unsecured loan or liquidity is a debt product that doesn't require collateral. So they can get access to money without requiring any collateral that they have to hand over, and we'll go through how they go about doing that in the video. Driven by market forces of supply and demand, Clearpool's permissionless single borrower pools enable institutions to raise short-term capital while providing DeFi lenders access to risk-adjusted returns based on interest rates derived from market consensus. So they have their Prime product, which is non-custodial institutional grade marketplace where you can connect to the largest global KYC and AML compliant network for wholesale borrowing and lending of digital assets. And then they have their permissionless product as well, which allows you to lend directly to whitelisted institutions, aka institutions that have been vetted and earn risk-adjusted returns with no lockup period. Lastly, they have their oracles and staking. So the Clearpool Oracle Network, composed of various institutions, votes on parameters that determine the interest rates of permissionless pools. This enables you to earn yields on CPOOL by staking to an Oracle pool and contribute to securing an interest rate pricing mechanism. Basically like governance token vibes. So we'll start with Prime here. So it says on Prime, all counterparties, both lenders and borrowers, undergo robust KYC and AML due diligence. Borrowers can launch pools with customized terms, while lenders are able to gain access to yield opportunities with high quality institutional counterparties, all within a secure, compliant environment. And this product is specifically available on Polygon right now. Borrowing with Prime does not require the provision of collateral like we said. A borrower creates a pool with specific terms within the smart contract. Normally it's the lender that does it first, but on this one it's the borrower. I think that's pretty cool. It's different. After the pool is created, a borrower can invite any other whitelisted institution to fund the pool. Loaned assets are transferred automatically and directly to the borrower wallet address without Clearpool having custody at any point. For lenders, whitelisted institutions who have been invited to fund a borrower pool will receive a notification via email detailing the borrower and pool terms. Lenders can supply liquidity only to pools they have been invited to within the limits of the pool terms and supply window. How is the interest rate determined? It says interest rates are fixed and agreed when the pool is deployed. Since loaned assets are not held in protocol custody, interest for both lender and borrower participants begins to accrue as soon as the interest is loaned. Let's talk about revenue. There's two types of fees, the origination fee and the protocol fee. So the origination fee is directly sent to the Clearpool Treasury when a borrower repay transaction occurs, aka final repayment including principal, and is charged to the borrower. The origination fee is calculated on the amount raised by the loan on an annualized year with 360 days and a 30-day standard month. It says here, in the event that the loan is rolled, the protocol will charge a smaller origination fee for every roll equal to 10% of the origination fee. That means the origination fee is applied only on the original tenure set on the pool, and the additional 10% annualized added to origination fee for every roll. In regards to rolling loans, it says up to 48 hours before maturity, the borrower can call the roll function, and this provides the option for lenders to extend the pool for an additional period equal to the original pool duration. Lenders may opt in or opt out of the roll. When a pool is rolled, records of the lenders who opted in are added to the roll lenders map. There, the pool keeps the information about the maturity date and the interest accrued. Since users can opt out from the next roll, their maturity date will be updated accordingly. With the current version of Prime, only single lender pools will be rollable. So the question is you rolling? Just kidding. Now let's talk about the protocol fee. So it says this is a governance approved percentage of pool interest, which is diverted to the protocol treasury at the time of maturity/repayment. The fee is applied only once the repay transaction is initiated by a borrower. Penalty interest will start accruing immediately after missing the date and time of repayment. However, accrued penalty interest is not subject to interest rate spread charges. Now I have a whole section for their terms and the services agreement. Pretty legit. You can go through all this. It's just a bunch of legal jargon, but better to have it than to not. You don't see this with Aave, but that's because they're permissionless. Then they have a product user guide that shows you how to do literally everything you need to do on the platform, but I'm going to do a platform walkthrough at the end here. But if you feel so inclined, you can always go through this as well. They give you all the info for onboarding for permissionless pools as well, the KYC, show you how to launch a pool, how to borrow and repay, which is pretty much the same thing for Prime products. So I'm not going to go through all of those. Credit risk scoring. So I talked about how they allow you to get a loan without collateral. Well, in order to do that, they have to verify your credit score and the likelihood that you'll repay. That's also how they determine the interest rate. So it says Clearpool has partnered with Credora, who uses privacy-preserving zero-knowledge technology to calculate real-time risk computations on the borrowers who launch pools on the Clearpool protocol. 15% of permissionless pools revenue is allocated to Credora for their service. So you can find out more about their methodology here. You click it, and you can go through all this stuff, the factor model, evaluation process. They give you everything that they look at in order to, determine a borrower's capacity and risk and all that stuff. And they also have a link to the website here as well. So yeah, I've went through this already. I'll save that for another video, or if you guys want to go through that on your own time, but pretty legit. All right, so let's start to go through some token metrics here, some tokenomics. So it says anyone holding CPOOL can earn a yield through staking CPOOL with Clearpool oracles. So liquidity providers are rewarded for supplying liquidity to borrower pools with additional rewards paid in CPOOL. CPOOL rewards are provided in addition to the USDC interest paid by the borrower, which keeps lending yields on Clearpool among the most competitive in the industry. They do buybacks. I always say when you invest into a crypto project, you want to ensure that they're either burning tokens, buying back tokens, or have a capped supply to help the supply and demand of the price. So it says here the revenue that's generated from both permissionless and permissioned liquidity pools is used to buy back CPOOL on the open market. The CPOOL that's purchased through these buybacks is either deposited to the rewards pool to be distributed later as LP/staking rewards, or burn, even better. Buybacks will occur once per quarter on a randomized date. So these are the buybacks that they've done so far. And then they also give you the buyback statistics and even the transaction hashes. They give you everything. Let's go through the tokenomics here. So it says they were launched on October 2021. It gives you how much the total supply that was allocated on the seed round, the private round, the public round. It gives you the vesting details, fully diluted valuation, how much the team got, 15%. That's not bad. Ecosystem partnerships, rewards. It gives you everything. I like this token allocation. It's not too bad. If we look at the roadmap, let's see what they got on the map for 2024. So credit vaults, new chain, fintech borrowers, new multi-chain UI, term pools. They give you all the things that they're aiming to get done within the year. They got Prime version 2. And guys, This project has a super small market cap for what they're doing. Let's take a look at their team. Pretty legit. CFA co-founder and CEO, previously executive director, head of repo trading at First Abu Dhabi Bank. Another guy from First Abu Dhabi Bank, BBVA, Securities and Accenture, and the Italian Securities and Exchange Commission. He was the lead and digital custodian for all of these. This guy was previously a commercial director at Aspire, Southeast Asia leading digital neobank, and Rocket Internet. So got a pretty good team. You guys can go through the rest of the team members if you want. You just click team and it literally gives you everyone. You can just look them up on Twitter or on LinkedIn. Let's dive a little deeper into their tokenomics. So if you look here on tokenunlocks.app, you can see that the next unlock is going to be in actually 8 days. Well, it depends on when you're watching. It's February 28th, which is my dad's birthday. And it's going to be 1.53% of circulating supply. And if we go to CoinGecko, you can see the vesting schedule. So we are in February of 2024. So you can see that it's kind of starting to pick up, right? Kind of starting to pick up. Now this is, I'm not going to say it's a red flag. I don't like this because things aren't going to start to balance out until we get into the end of the year, November. But it's all good because the market cap is extremely small. You can see the market cap's only 69 million with a fully diluted valuation of only 155 million. That's super small. So much room for growth, right? So now if we looked at this, let's see how they stack up against their competitors. So if we go to rwa.xyz, you click private credit, you can see that at the peak, we were at $1.5 billion. And you can see that right now, we're only at 500 million or so. It's definitely going to increase, especially as the bull market comes around. The assets on the balance sheets of these cryptocurrencies are going to balloon, which is going to make them more credit worthy, which is going to allow them to collateralize and borrow more capital from protocols such as these, such as Maple, such as Centrifuge that I also did a video on, which is going to make the price rise. So if you look here, I just showed you guys the market cap. The fully diluted valuation for Clearpool is 155 million. The market cap is 69 million, but right now in total loans, they've already done 183 million and they have $20 million in active loans right now. Average APY is 7%. The cash drag is 15%. So they're utilizing around 85% of the capital. And I would imagine it's because the liquidity is so low. But a couple things, I expect that to rise. And two, this Clearpool is not my largest allocation when it comes to protocols within this industry. My largest one is Maple. My second largest one is Centrifuge. And then my third largest is Clearpool. And I'm okay with that because the market cap is the smallest. So even if they all pump, because I have less money in here, I could still end up making more than the other one just because of that. So that's, you know, just using proper risk management. Another reason why I'm bullish on this protocol, you go to CoinGecko, you type in RWA, make sure you click the category and not the actual token. I've been saying that I think RWAs is the narrative that's going to bring in the most money in the upcoming bull market because it's going to be favorable to institutions and they have all the money. So what I like to do is try to find projects that haven't cracked the top 100 yet, top 50, top 10, who have the chance to. And I can, with 99.99% certainty, assure you that there's going to be some protocols in the real world asset category that'll crack for sure the top 100, for sure the top 50, and I think the top 25, top 10 also. I called out Pendle back in November. It's already up almost 400%. If you watched our video and did your research, you could have made some money. We made some videos on Maple. I made a video showing how I plan on turning 15K into over $1 million investing into Maple. I showed my yield farming strategy. Give that a watch if you haven't. And you can see if you scroll down here, Clearpool is number 525. It's definitely not going to stay there. And guys, if you're interested in this kind of content and you want to get access to my buy calls, my research, access to our coaches, and our flagship course that shows you how to do everything I do on this channel, my personal channel, in terms of technical analysis, fundamental analysis, and yield farming, so you can accumulate these assets passively, click the link in the description and book a free strategy session. We'll see if our program is a good fit for you. We only let a certain amount and a certain type of person in. Guys, I already told my members in my group about Clearpool a few weeks ago. This purple line is where I bought in, and if I drag this up, I'm already up 80%. And you can see, just to go back to its all-time highs, man, $5.97 Right now we're only at 15 cents. So guys, now that we've covered all that stuff, let's do a platform walkthrough and see how easy the UI is to navigate. All right, so here we are on Clearpool.finance. It gives you the loans that they originated. It gives you who they're backed by. Sequoia, that's a big name. Wintermute, that's the largest market maker in crypto, at least last time I checked. Pretty much show you what they do, all the stuff that we pretty much covered in the docs, the prime. So let's go ahead and launch app. So it says you can earn an additional 5% in OP rewards when providing liquidity in optimism pools and an extra 15% in providing liquidity in mantle pools, which is pretty cool. So these are the permissionless pools. So it says it's loading right now. But if you want to lend in these pools, it shows you all the APRs. Pretty low. You can get a way higher yield in yield farming. But I'm not aiming to use this platform. I'm aiming to invest into it because I know institutions will use it because they're not going to borrow via over collateralized like we talked about. So you see the pools. Let's click Prime. It takes you here. This is the institutional application. Gives you all the KYC and everything like that. If we launch Prime, kind of looks like the previous one, but you have to get KYC to this one, so I probably won't be able to see anything. Let's see, click profiles. It gives you KYC completed, total amount borrowed, pools. You have to connect your wallet. Oh, also guys, super important. They have a fuck ton of smart contract audits. And the important thing is that Certic, that's one of the top auditing firms, they had vulnerabilities that were a problem. They came back and got audited again and addressed them. That is a good sign because these audits are not cheap and it shows that the project is serious. And they also have a bug bounty to where they will pay you if you find vulnerabilities within the platform. It's a good sign. Going back here, let's look at staking. So you can stake your CPOOL. Also, when you go to deposit, you get like CPOOL tokens, kind of like you get an LP token when you yield farm. Showed you how it works. We kind of went through all that in the docs. If you want to stake, right now the average APR is 2.79%. I'm gonna make a video showing how you can earn a better yield via Clearpool through yield farming. They have their Clearpool bridge where you can bridge your CPOOL tokens across the networks that they operate on, which right now are Mantle, Optimism, Polygon, and Polygon ZK EVM. So yeah, if you look on the side, it can show you your positions. I don't have any. Show you your pool, your terms. You can create your own term if you want to borrow money on here. I'm not on my hot wallet right now, so I'm not going to connect my wallet, but if you guys want to do that, feel free. All right, so with that, I'd like to conclude this video, but not before I tell you the surprise that I promised at the beginning. So if you guys go and subscribe to my Crypto Noah YouTube channel, my personal channel where I cover different yield farming protocols, take profit strategies. This one is more macroeconomics and we cover protocols more in depth. I am going to make a video showing you how I plan to turn 6K into over 400K. I'm not sure what I'm gonna title it yet, so if you see the title and it's different, don't hold it over my head. But I'm going to show you what I would look for if I were to yield farm Clearpool. And I'm going to show you my exact step-by-step profit taking strategy. All right. So if that's something you're interested in, go over there, subscribe. And like I said, if you're interested in this kind of content, you want to learn how to do this for yourself, click the link in the description and book a free strategy session. But with that, if you got value from this video, I ask you to consider subscribing, drop a like, drop a comment, share with a friend. Let us know what real world asset protocols you want us to cover next. I know JT wasn't in this video. He's actually in the process of moving here so we can be making videos in person. So be out on the lookout for that. We're going to start making podcasts. It's going to be dope. So with that, I thank you guys so much for watching. I love every single one of you, and I'll see you guys in the next video. Take care and trade safe.